Hey guys, so technology and electronic devices are becoming a bigger part of our lives every single year, and the growth of many of these sectors, including personal computers, mobile phones, and data centers, will continue to grow in the next 5 to 10 years quite significantly. And the large majority of devices and technology that is used in these sectors does require semiconductor components. Because of this, the semiconductor industry as a whole is set to grow quite significantly as well, and many companies within this industry are set to do really well in the coming years. Because of this, I thought I'd make a video on some of my personal favourite semiconductor companies to potentially invest in. I'll be taking a look at 5 different companies, looking at what the company actually do, the specific technology that they do focus on, their financial performances, and the future outlook for each company. If you do enjoy the video and would like to see similar videos to this in the future, be sure to leave a like and subscribe, as that does help out the channel a lot. And apart from that, let's get right into it. So first of all, I just wanted to quickly talk about why the semiconductor sector is definitely a good one to invest in right now. So semiconductors are materials that have conductivity between conductors such as copper or other metals and non-conductors or insulators such as ceramics or glass. They are used for a wide range of products and devices and can be found in most household electronic items. They are also used in healthcare, military systems, transportation, clean energy, and many other areas of society. The demand for semiconductors across the world is increasing quite rapidly every year, and in 2021 alone, the whole industry is expected to grow by between 8 and 10%, with companies operating in the sector expected to see a 15 to 18% growth in earnings on average. Cloud data centers, 5G technology and infrastructure, and electronic vehicles and clean energy are all set for massive growth over the coming years, with more and more semiconductors needed every single year to keep up with the demand. And in fact, right now, there is currently a global semiconductor shortage, with many companies not able to get hold of enough semiconductors to match the demand for their products. Major car companies such as General Motors and Ford recently warned of slowed vehicle production due to the shortage of semiconductors. And Sony also said that this is the reason why the PlayStation 5 is so hard to get hold of, as production simply can't keep up with the demand at the moment. And with the demand constantly going up every year, semiconductors are likely to remain like gold dust for the foreseeable future. So the first company I'm going to look at today is Taiwan Semiconductor Manufacturing Company, who have the ticker symbol TSM. So Taiwan Semi are the largest semiconductor company by market cap, currently trading at $138.06 per share, with a market cap of $581 billion. They operate under a foundry business model, which means that they focus solely on manufacturing customer products for them, meaning that they don't design or market the products under their own name. They are the largest semiconductor foundry, manufacturing 11,617 different products, using 281 distinct technologies for hundreds of different customers. Looking at their Q4 2020 revenue, 51% of it came from smartphone products, 31% of it came from high-power computing, 7% from internet-based devices, and 3% from the automotive sector. They are growing their revenue and earnings consistently every year. Between 2017 and 2020, revenue has increased from $34.9 billion to $47.8 billion, while earnings have increased from $12.3 billion to $18.5 billion. They are also looking to grow at a compound average growth rate of 10 to 15% from 2020 to 2025, achieving a 50% gross margin and a 39% operating margin. So Taiwan Semi are also a great dividend stock to hold because the dividend yield is quite good and the growth rate is very high. The current dividend yield is 1.56% and the 5-year compound average growth rate of this dividend is 18.96%, meaning that investors can expect their dividend payouts to increase quite significantly over time. So next up we have NVIDIA Corp, ticker symbol NVDA. So NVIDIA are one of the leading global providers of chips and high-performance computing, currently trading at $598.45 per share, with a market cap of $370 billion. NVIDIA are leaders in GPU computing, gaming, and AI technology, and are continuously innovating the spaces that they operate in, improving their products and offering their customers the absolute best quality and performance on the market. The gaming sector is where NVIDIA earn approximately half of their revenue from, where they are the number one brand in PC gaming with more than 3 times the revenue of the second biggest GPU company. They do also expect revenue to continue to grow at a compound average growth rate of 11% for the next 3 years in this sector. NVIDIA's fastest growing revenue sector is in data center technology, where they had a revenue of $2.98 billion in 2020 and are expecting to grow this at a compound average growth rate of 53% for the next 3 years. NVIDIA chips are used by all major cloud computing providers and can be found in 8 of the top 10 fastest supercomputers in the world. Comparing 2017 with the last 12 months, revenue has increased from $6.9 billion to $14.8 billion, while earnings have increased from $1.7 billion to $4 billion. And analysts do predict that this revenue is going to keep growing at a fast rate, predicting that it's going to jump to $16.5 billion in 2021, while earnings will also jump to $9.7 billion. So next up we have Advanced Micro Devices with the ticker symbol AMD. So AMD are a leading provider of high-performance computing components as well as data center technology. They currently trade for $93.77 per share with a market cap of $114 billion. AMD produce some of the most powerful mobile and desktop processors as well as high-performing GPU and graphics components. Their Ryzen 5000 series range of desktop processors are the fastest in the world for gaming, productivity and content creation. They are also pushing to deliver CPU and GPU differentiation for data centers, including cloud services and machine learning. They are working with some big-name companies like Amazon Web Services, Microsoft Azure, and Google to expand data center deployments and create virtual machines. AMD had a fantastic 2020, growing revenue to $9.76 billion, which is a massive 45% increase on 2019's $6.7 billion. They also increased their net income to $2.5 billion for 2020, which is up from the $340 million achieved in 2019. Their gross margin also increased for the 5th straight year to 45%. And AMD are looking to continue their rapid business growth, expecting 2021 revenue growth to be around 37%, while also increasing gross margin to 47% and targeting 50% plus gross margin in the long run. So the next company here is called Broadcom, ticker symbol AVGO. So Broadcom is a semiconductor company producing solutions for Wi-Fi and broadband, data centers and infrastructure. They currently trade for $486.32 per share with a market cap of $198 billion. In 2020, almost 75% of their entire revenue came from semiconductor solutions for networking, broadband, server storage, wireless connectivity, and others. Just over 25% of it came from infrastructure software, including cybersecurity. Broadcom do have a massive intellectual property portfolio across a wide range of sectors, totaling over 23,000 patents. They also invested $5 billion into research and development in 2020 to keep innovating their products. Broadcom are an extremely good dividend stock to hold, in my opinion, with a good yield and very high dividend growth. At the moment, their dividend yield is 2.96%, which does put them far above most other technology and semiconductor companies. Their dividend growth was 19.2% in 2020, and the 5-year compound average growth rate of this dividend is 52%, which is very impressive. But on the flip side, you're not getting quite as much growth with this company as some of the others on this list. Between 2017 and 2020, revenue has increased from $17.6 billion to $23.9 billion, with revenue only increasing by 5.7% from the $22.6 billion revenue in 2019. Between 2017 and 2020, earnings have increased from $1.7 billion to just under $3 billion. Their gross margin is also very strong at 73.5%. So Broadcom are definitely still growing their business and growing their revenue, but it's just not quite at the same extent as some of the other faster growing semiconductor companies. So the final company today is called Applied Materials with the ticker symbol AMAT. So Applied Materials are the leading provider of material engineering solutions that are used to produce brand new semiconductor chips. They currently trade for $116.70 per share, with a market cap of $107 billion. So as semiconductor companies do grow their business, they need to invest capital in new machinery and equipment in order to expand their production capacity and continue to grow their revenue. Applied Materials engineer highly sophisticated manufacturing technology that is used to produce the world's most complex chips and displays. They essentially allow chip companies to produce better quality chips while working faster and more efficiently. Applied Materials invest $2.2 billion annually and dedicate 30% of their entire workforce to research and development to make sure their manufacturing products are top of the line. They do also have a strong intellectual property portfolio with 12,500 patents in total. 2020 revenue increased 18% from $14.6 billion in 2019 to $17.2 billion in 2020, while earnings also increased from $2.7 billion to $3.6 billion, which is an impressive 33% growth. Their gross margin also looked strong at 45.1%, and analysts do expect that Applied Materials will keep growing their revenue at a good rate, with 2021 estimated revenue set at $19.8 billion. So that is all for today's video, guys. Please remember that this is not financial advice, as I am not a financial advisor. This video is for purely entertainment purposes only, and you should definitely do your own research on any company before you think about putting your own money into them. Obviously, this video did cover 5 different companies, and I only really had time to sort of delve into the key points around each company. But hopefully, if there's a few of these companies that you do like the look of, you can go away and do some deeper research and find out even more about them. So with that being said, please leave a like if you did enjoy the video, as that really does help out a lot. Be sure to subscribe if you want to see similar videos to this in the future. Drop me a comment, let me know what your favourite company is from this video. And apart from that, guys, thanks a lot for watching.